And now, thank you again for attending Understanding the Work Opportunity Tax Credit. I'm going to pass it over to you, Anika and Cheryl.
Awesome. Thank you so much. So I'm just waiting for our slides to pop up to get started. But so today's presentation is, of course, on understanding the work opportunity tax credit. So basically what I'm going to do with you all today is I'm going to, I'll explain what the work opportunity tax credit is. Then we'll describe the targeted groups that qualify for the credit. We'll discuss the pre-screening and certification process. We'll also discuss how to claim the credit and credit limitations. And then we'll close out with providing you with a few resources available on irs.gov regarding the work opportunity tax credit. But before we jump into all of that, I would first like to formally introduce myself. So, um, my name is Anika Pompey, as Wendy mentioned, and I am a senior stakeholder liaison with the Internal Revenue Service. I'll show you can advance to the next slide. So just a little bit about stakeholder liaison. What we do is we partner with local organizations such as professional organizations, small business organizations, community organizations, as well as local, state, and federal government agencies to do tax education and outreach. I've done this now for a little over 4 years because I started in March 2020. Prior to that, I worked as an auditor. So I was official title was tax compliance officer. I did office audits of the Form 1040 and all of its associated schedules. So I did do a lot of Schedule C audits for those small businesses who are sole proprietors and file Schedule Cs. And after I moved on from being an auditor to an audit group manager. And then prior to becoming a TCO, I was also, I worked in customer service. So I answered the telephones for 2.5 years and helped uh, taxpayers resolve account issues. So overall, my time with the IRS spans almost 18 years. Next week is actually my service anniversary. It'll be 18 years on October 2nd. And that's enough about me. I'm going to turn it over to Cheryl and she can go ahead and introduce herself and we'll go ahead and get started. Cheryl, you with me?
I am so with you. To unmute.
Okay.
I'm just glad y'all can see the screen. Good job. I am Cheryl Jackson, again, Senior Stakeholder Liaison out of Richmond, Virginia. And I have been with the Internal Revenue Service for 26, going on 27 years as of November. Um, in my time with the Internal Revenue Service, I also worked in customer service and I spent 18 years in collections. So, out of that total time, we've got a little bit of time here over in as also as a stakeholder liaison. We at the IRS are committed to getting information out there to you as far as getting your business going, getting things showing you the information that would help you to operate and maintain a business if that is what you choose. We also are there for you when you need information as far as just a regular preparer. We have all type of resources. Our website, Anika is going to give you a little bit of what she has today, but there's always resources out there with the Internal Revenue Service. Our website is there for you, and we are as well. So we're going to get started. Anika?
All right, thanks, Cheryl. We can go on to the next slide. So before we get started, I do also want to mention that so today's presentation is designed to provide you all with information. It's not to provide you with specific tax advice. If you need specific tax advice regarding your tax situation, we advise that you consult with your trusted tax advisor to address that situation. We will be taking questions at for today's presentation, we're just going to ask that you hold those questions. Well, you can include them in the chat box, the Q&A box, I believe it's called, and then we'll address those questions at the end of the presentation. All right, so let's go ahead and get started. So as we mentioned, we are talking about the Work Opportunity Tax Credit today, also known, well, the acronym is WOTC. So the Work Opportunity Tax Credit, it is a federal tax credit that is available to employers for hiring individuals from certain target groups who have consistently faced significant barriers to employment. So the Work Opportunity Tax Credit joins other workforce programs that incentivize workplace diversity and facilitate access to good jobs for American workers. Now, the Consolidated Appropriation Act of 2021 authorized the extension of the Work Opportunity Tax Credit until December 31st of 2025. So, an employer can claim the Work Opportunity Tax Credit for an individual who is certified as a member of any of the following targeted groups under Section 51 of the code. So these groups include formerly incarcerated or those previously convicted of a felony. Also recipients of state assistance under Part A of Title IV of the Social Security Act. Includes veterans. It also includes residents in areas designated as empowerment zones or rural renewal counties. That word always gets me. Also individuals referred to as an employer following completion of a rehabilitation plan or program. So any person who was referred after they completed a rehabilitation program. Also, it includes individuals whose families are recipients of supplemental nutrition assistance under the Food and Nutrition Act. So persons who receive SNAP benefits. This group also includes recipients of supplemental security income benefits under Title 16 of the Social Security Act, as well as individuals whose families are recipients of state assistance under Part A of Title IV of the Social Security Act. So you may be familiar with that. It's typically called TANF, Temporary Assistance. I forget what the N stands for. We're going to find out in the next slide. And then also individuals experiencing long-term unemployment. So what we're going to do is over the next couple of slides, we're going to define what these particular or describe in more detail recipients of these particular targeted groups. All right, so let's start with qualified 4A recipients. As I was mentioning in the previous slide, these are recipients of TANF, Temporary Assistance for Needy Families, TANF. So a qualified 4A recipient is basically an individual who is a member of a family receiving assistance under a state plan approved under Part A of Title IV of the Social Security Act relating to temporary assistance for needy families. Now, the assistance must be received for any 9-month period during the 18-month period ending on the hiring date. Now let's talk about qualified veterans, because a qualified veteran is going to be any of the following. They're going to be a member of a family receiving assistance under the SNAP program for at least 3 months during the first 15 months of employment. Any veteran who is unemployed for a period totaling at least 4 weeks, but less than 6 months in the 1-year period ending on the hiring date. Those 4 weeks don't have to be consecutive. Any veteran who is unemployed for a period totaling at least 6 months in the 1-year period ending on the hiring date. Again, those 6 months don't have to be consecutive. Any veteran who is a disabled veteran entitled to compensation for a service-connected disability, hired not more than 1 year after being discharged or released from an active duty in the U.S. Armed Forces. And then also any disabled veteran entitled to compensation for a service-connected disability who is unemployed for a period totaling at least 6 months in the 1-year period ending on the hiring date. Again, those 6 months do not have to be consecutive. Now, there is additional information regarding the qualifications or what determines a qualified veteran in IRS Notice 2020-12-13. And that notice, a link to that notice can be found on the IRS website on the Work Opportunity Tax Credit page. And we'll talk about that a little later in the slides. Now, the next person or type of person in the targeted groups will be the ex-felon. So these are formerly incarcerated individuals. A qualified ex-felon is a person who was hired within a year of either being convicted of a felony or is being released from prison from the felony. And then you have the designated community resident living in an empowerment zone or rural community. So basically, a designated community resident is any individual who, on the date of hiring, is at least 18 years old and under 40, and the resident, they reside in one of the following: either an empowerment zone, an enterprise community, a renewal community, and they also continue to reside in these locations after employment. And then another targeted group is the vocational rehabilitation referral. So a vocational rehabilitation referral is a person who has a physical or mental disability and has been referred to the employer while receiving or upon completion of a rehabilitative service pursuant to a state plan approved under the Rehabilitation Act of 1973 or an employment network plan under the Ticket to Work program or a program carried out under the Department of Veteran Affairs. So those are the first 5 targeted groups. Let's go on and discuss the final 5. Another targeted group is the summer youth employee, also living in empowerment zones. So a qualified summer youth employee is one who is at least 16 years old, but under the age of 18 on the date of hire or on May 1st, whichever is later, and they are only employed between May 1st and September 15th, and they were not employed prior to May 1st, and they reside in an empowerment zone, the enterprise community, or renewal community. Another targeted group are SNAP recipients. So remember, again, these are the Supplemental Nutrition Assistance Program recipients. Now, a SNAP benefit recipient is going to be an individual who, on the date of hire, is at least 18 years old, but also under the age of 40. And they are a member of a family that received SNAP benefits for the previous 6 months or at least 3 of the previous 5 months. And then you have the Supplemental Security Income recipients. An individual is a qualified SSI recipient if a month for which this person received SSI benefits is within 60 days of the date that this person is hired. Next are the long-term family assistance recipients. A long-term family recipient is an individual who at the time of hiring is a member of a family that meet one of the following conditions. 1, they receive assistance under a 4A program for a minimum of the prior 18 consecutive months, or they received assistance for 18 months beginning after August 5th of 1997, and it has not been more than 2 years since the end of the earliest of such 18-month period, or they cease to be eligible for such assistance because a federal or state law limited the maximum time those payments could be made, and it has not been more than 2 years since the cessation. And then finally, you have the qualified long-term unemployment recipient. So a qualified long-term unemployment recipient is one who has been unemployed for at least for less than 27 consecutive weeks at the time of, I'm sorry, for not less than 27 consecutive weeks at the time of hiring, and they receive unemployment compensation during some or all of the unemployment period. So that is all 10 of the targeted work groups. Now you're probably asking yourself, well, how do we determine if the people that we're hiring fall into these work groups, these targeted groups? Well, there is a pre-screening and a certification process. So before claiming the credit, you must ask for and be issued a certification for each employee from the state workforce agency of the state in which your business is located. The certification proves that the employee is a member of a targeted group, and all employers must obtain certification that an individual is a member of the targeted group by filing Form 8850, pre-screening notice and certification request for the work opportunity credit. An eligible employer must file Form 8850, pre-screening notice and certification request for opportunity credit with their respective state workforce agency within 28 days after the eligible worker begins work. And employers should contact their individual state workforce agency with any specific processing questions for the Form 8850. Now, this is an image of the Form 8850, and this form actually consists of 2 pages. So on the first page of the form, the job applicant must provide their personal information, including their name, their social security number, their address, telephone number, and their date of birth if they are under the age of 40. And then in the lower half of the form, there are check boxes. So they pretty much have to indicate if they are a member of any of the targeted groups. Now on page 2 of the 8850, this is the section that the employer is to complete. So the employer provides information including their name, phone number, EIN, as well as their address. There are 4 dates that must be provided before Form 8850 can be submitted to the state workforce agency, and they are the dates that the job application gave their information, was offered the job, was hired, and then also started the job. So to confirm that the employer pre-screens the job applicant, the date that the applicant gives their information about being a targeted group member must be the date that is the same as or before the date that the applicant was offered the job. The date that the job applicant was hired and the date that the job applicant started the job must be on or after the dates that the applicant gave their information and was offered the job. So Form 8850, it includes the dates entered on page 2 of the Form 8850. If you take a look, if you see on the screen, that's the box that is highlighted in red. And the form must be signed under penalty of perjury, and it must be submitted to the state workforce agency. Or if you're mailing it, it has to be postmarked no later than 28 days after the date that the job applicant started the job. Now let's discuss the limitations on the credit. So the credit is limited to the amount of the business income tax liability or the Social Security tax owed. A taxable business may apply the credit against its business income tax liability, and the normal carry back and carry forward rules will apply. So in general, the taxable employers may carry the current year's unused work opportunity tax credit back 1 year and then forward up to 20 years. You can refer to the instructions for Form 3800, which is the general business credit, for more details. And for qualified tax exempt organizations, the credit is limited to the amount of the employer Social Security tax owed on wages paid to all employees for the period the credit is claimed. Now, in order to claim the work opportunity tax credit, taxable employers will, after the required certification is secured, they will claim the credit as a general business credit on Form 3800 against their income by filing the Form 5884, the Form 3800, and then the business's related income tax return. So whether, depending on your business entity type, it'll be the Form 1040, the 1120S, a 1041. And then for tax exempt employers, qualified tax exempt organizations described in IRC Section 501C and exempt from taxation under IRC Section 501A may claim the credit for qualified veterans who begin work for the organization before 2026. So after the required certification is secured, the tax exempt employers claim the credit against the Social Security tax by separately filing the Form 5884C, which is the work opportunity credit for qualified tax exempt organizations hiring qualified veterans. Tax exempt employers will file the 5884C after filing the related employment tax return for the period that the credit is being claimed. And the organization files the Form 5884C for each employment tax period during which qualified first-year wages are paid to qualified veterans. And generally, the organization should only file one Form 5884C per employment tax period. Now, the IRS does recommend that qualified tax-exempt employers do not reduce their required deposits in anticipation of any credits. The credit will not affect the employer's Social Security tax liability reported on the organization's employment tax return. All right, so this image here, this is an image of the Form 5884. Again, you're going to use the 5884 to claim the work opportunity credit for qualified first and or second year wages you paid to or incurred for targeted group members employed during the tax year. And partnerships, as corporations, cooperatives, estates, and trusts must file this form to claim the credit. And again, this form, along with its instructions, can be found on the IRS website. Now, this is just an image of the Form 3800. So after you complete the Form 5884, the amount of the credit that you compute will be forwarded, will be included on Form 3800. And this form is also found on irs.gov along with its instructions. And then finally, this is an image of the qualified tax exempt, the Form 5884 for qualified tax exempt organizations. So they're going to use this credit, this form to claim the work opportunity credit for qualified first year wages paid to qualified veterans who began working for the organization on or after November 22nd of 2011 and before January 1st of 2026. The credit, again, is claimed against the employer portion of the Social Security tax on wages paid to all employees during the 1 year period beginning on the day a qualified veteran begins working for the organization. This credit is not going to apply to the employer portion of Medicare. The qualified veteran must be performing services and activities related to the purpose or function constituting the basis of the organization's exemption under 501C. So that is pretty much all of the information that I have to share on the work opportunity tax credit. We do have a few resources for you. First and foremost, there is a YouTube video on the work opportunity tax credit, but it really is just a brief summary video. And I've made it easy for you to find the video. Once you get a copy of this slide deck, you can just click on this image on the slide and it'll take you directly to the work opportunity tax credit video on our YouTube page. And then there are additional resources regarding the work opportunity tax credit on the IRS website. So you can go to the IRS website and you can either do a keyword search for work opportunity tax credit in the search box, or you can in your web address bar, you can type in www.irs.gov/WOTC. And what you'll find there is you'll find information on how to certify job applicants and claim the credits. You'll also find information on which employees are eligible for the credit. And then you'll also find information on the limitations on claiming the credit. All right, so now we're going to go ahead and take some questions. I know I saw lots of questions popping up in the chat. Oh, and there's also some in the Q&A.
Yes, we had one question in the Q&A. They asked, can the person be a contract worker?
That is a good question. So in doing my research, there was no mention of whether the person could be a contract worker. So that is one that I'm going to have to research for you. Just give me one moment while I write that down. So let me back up. Can they be a contract worker for an employer or for a tax exempt organization? Because if we're referring to a tax exempt organization, the credit is against, yes, the Social Security taxes paid on behalf of the employee, and if they're a contractor, you don't pay Social Security taxes on their behalf because they're responsible for that on their own. And then for for non-tax exempt employers, the credit is against their income tax as well as Social Security tax. So again, in order for it to be offset by Social Security tax, they would have to be an employee. But I'm still going to write that question down to verify the answer.
Thank you, Anika. And Janelle, we'll follow up with you with a response. And I'll make sure to include everyone else for anybody else who may be wondering or asking that question.
Okay.
We do have in the chat, but yeah, that was the only question we had in the Q&A. For the chat, how do we measure or determine that we're consistently facing significant barriers to employment?
So that is pretty much so the employee that you hire is the one who is going to indicate whether they are facing barriers to employment, and it's pretty much a self-certification process. So you are going to give your potential hire is going to complete that form 8850, and on that 8850, as I mentioned, they're going to include their personal information at the top of the form, but then on the second second half of the form, there are check boxes that they have to mark. So I think I have a copy of the form up. Let me just take a look
You want
at
me to
it.
pull it back?
No,
I can,
no, I have
oh,
one
because
that
that's a
I
little
can
bit small. I
actually,
was about to say.
yeah, no, I'm gonna pull up one on my laptop. Um, just give me one moment, guys. Now, I had the form 5884 open. I don't know why I don't have the 8850 open. And now my computer's moving really slow. So,
Let me see if I can get it.
Do you want to skip to the next one? The next question
yeah,
is
let's
to this
move on to
one?
the next question while I'm waiting for this form to come up.
Okay. The next question, is an empowerment zone the same as a hub zone?
Okay, give me 1 second. I'm gonna have to look that one up too, but just give me one moment. Because they didn't use those terms interchangeably. Okay, so hub zone is a term that the Small Business Administration uses for programs for small businesses.
Two different things.
Yeah, those are two different
Two different
things.
things.
And empowerment zones are zones. That's a term that is specifically defined, not in the code, but in I believe the IRC notice, which defines the areas that these targeted group members can come from. So no, those are two totally different terms.
Thank you. Are there note slides as the details she explained are not on the slide? So there aren't any note slides. You will have the ability to go back to this recording if needed, but also the information, the links to, like she stated, on the YouTube channel and to the IRS website will be provided for you to go back and be able to look at the information that she mentioned, so you know the definitions for them.
Right. And I just want to add to that. So if you do, I mentioned that if you visit the work opportunity tax credit page on irs.gov, you'll find more information there. So you'll also find the definitions for each of these targeted groups on that page. It's when you scroll down the page, it'll list each one of the groups. It's one of those situations where you click on the box to open it up and it'll have share the information there. So it is available on IRS website. And again, if you want to refer back to the recording, you can, but it's probably just a lot easier to go directly to the IRS site, especially because the pages are updated periodically. So it's better to refer to the IRS site.
Yeah, with the updated information.
Mm-hmm.
What if you have employees in multiple states other than where the business is located?
So if you have employees in multiple states, you're going to certify with the state workforce agency in each of those states.
I'm looking on WOTC 8850 form, the gave info date should be earlier than the offered job date. Is that correct?
Right.
Mhm.
So the gave, right. So, and if you look at the second page of the form finally popped up for me. So we can probably circle back to that first question.
Mm-hmm.
But if you take a look on the second page of that form, the date where the dates have to be entered, it first date entered is the gave information date. Then there was the was offered date, the was hired date, and then the start job date. So I mean that the dates should be um uh they're in order, right? So if so the date that they gave you the information and was offered the job um have to
It
be
can
before they were hired and started the job.
Were you getting ready to say something, Cheryl?
exactly. I was just adding it could be the same day, but it has to be before those other 2 days.
Right.
Hmm.
So the date that the job applicant was hired and started the job, it has to be on or before the date that the applicant gave information or was hired. Now the date that they gave the date that they were gave information and were offered the job can be the same date, or it could be but it just has to be before they were hired and started the job. And that is spelled out. That is explained in the instructions on the on the form 8850. So you can always refer to the instructions on that form. But to answer the question about how you will know if they're in a targeted group, on the second half of the form 8850, the potential new hire, they're going to check the box indicating whether they're in these targeted groups. So there are a total of 7 check boxes, and they'll check. So it's basically a self-certification process. You just need to make sure you give them the form and have them fill it out completely, and then you need to make sure you complete um, the second page of the form and sign it before you send it over to the workforce agency. So they're going to check the box for any of these groups that they qualify for. And you don't have to do any additional verification. So let's say they check the box and say that they received TANF payments within the past 18 months. You don't need to collect any information from them to prove that they received TANF payments. If they're checking the box saying, yes, I did receive the payments, then that's all you need.
We have another question, and I didn't know if you wanted to share your screen with the form first before we move on to the next question
Hmm.
about business owners and filing a work opportunity tax credit for themselves.
So the work opportunity tax credit is it's for the employees that you hire in these targeted groups. So are you saying that that you're hiring yourself? Are you an employee of your business?
I think from the way that they worded it, that yes, if they could consider themselves as an employee for their business, which I have heard of small businesses, well, some businesses doing that, which is
Mhm.
adding themselves onto the payroll as well,
Right.
what that would look like for them as far as a work opportunity tax credit, or are business owners excluded?
Okay. So again, that didn't come up in my research, but again, I will look into that for you. So basically, you want to know, can the business owner who is also an employee of the business also receive the WOTC, the Work Opportunity Tax Credit, if they fall within one of these targeted groups?
Yes.
Okay, got you.
And we'll follow back up with you concerning that question, Jerry.
I'm writing that one down too. Anika, if you have.
Yeah.
And then there's another question that says, has any consideration been given to the hiring of military spouses in accordance with the Executive Order 13832 for the Work Opportunity Tax Credit?
I'm going to have to take that question back as well. Let me see if I can find that one.
It is.
Okay. All right. And what's the next question?
They wanted to understand the tax credit and the employment onboarding. So it says, do I understand it correctly that we cannot qualify for that credit if our qualified employee has already been hired before?
Hired by them before?
Yes. So I'm thinking with that question, it's either two scenarios. Either they were hired before and then there was a period where they no longer worked there and then they're rehired again, or they were hired beyond I think you guys said the 28 days. They're supposed to submit the work opportunity tax credit, I think 28 days after the employee onboards or the offer is submitted, right? So I'm thinking those two scenarios of what they're asking.
Okay. I'm reading the question now. Do you, if he's still on, do you want to provide some clarification to the question?
And if you're on the app, you can raise your hand. I can actually take you off mute as well. Because we have a small group today, so that's good.
Okay.
And while we wait for you either to place it into the chat if you're still online, or raise your hand and I can unmute you. The next question, I have someone who is on the job training from DC Department of Employment Services. She has been working for 3 months. Did I hear you say that we must file within 28 days of employment?
Right. It has to be within 28 days. You need to send that form 8850 to your state workforce agency.
Okay, I'm gonna unmute. And I apologize if I'm not saying your name correctly. I think it's Hamid. You are unmuted. We can't hear you if you're speaking. Okay. While we wait for him to come off mute. Yes, within 28 days.
I can hear you now, but I couldn't hear you before.
Okay, wonderful. We can hear you.
Hello?
Can you please clarify your question?
Hello?
He can't hear you though.
Oh,
We can hear you. Can he hear us?
I asked him to check his audio. Okay, while we're waiting for him to check his audio. The next question, the instructions say to file the form in the state in which your business is located, but you're saying file it in the state in which the employees work. Which one is the correct one?
Right. So I just read that and I refer it back to the instructions. And so it does say to file it in the state where your business is located. The information I used to prepare the PowerPoint says different. So, and it may be a situation where we fail to update these slides. So I would go with the form instructions, but I am also going to just double check this information. But if the form instructions say to file it where your business is located, then um, use that information.
Thank you, Stacy. She stated she asked that because her employees are remote. So
Okay, makes
like
sense.
Anika said, yeah, follow the instructions on the form. And we'll
Mhm.
follow back up with you to see if there's any updated information, excuse me. 'Cause I know forms are updated all the time.
Yeah.
Is it only for our new hires, the work opportunity tax credit?
Yeah, so it would be for employees that you're hiring, new employees that you're onboarding.
Okay, if I have employees who have been tenured for longer than a month, is the employer still eligible to submit required forms to become eligible for the work opportunity tax credit? Or does that relinquish after the 28-day submittal requirement? I think we
So
already addressed that, Anika.
yeah, so because you have to receive the certification from your state workforce agency within that you have to send that form by 28 days. If it's beyond the 28 days, unfortunately they're not going to be able to certify you. I mean, you could submit it, but it's a possibility that they will um it's always a possibility that they will decline it. And if you don't have that certification, then you wouldn't be able to claim the credit.
So Hamid, I have submitted a request to you to unmute again, just in case you fixed your audio.
When on the form, there's the requirement that they have that the person does their certification before they're even before they're hired, right?
Right. So they have
So
to complete that. They have to complete that form.
before they're even hired, right? So
Right.
if they've gone through the process, they're already working. They've passed that even
Right.
if you're
Yeah,
the
because
28 days and all of that stuff doesn't even take into account the fact that they didn't fill out the form. They haven't even filled out the form before they were hired. So,
right. Because
yeah,
again, you got to remember about those dates. So you have to include the date that the information was given, the date that the job was offered, and then the date they were hired and they were started work, right? So if the date that they gave you the information is after the period where you hired them, where you offered the job and hired them, then you wouldn't meet that qualification, and we don't want you to lie about that information because again you're signing this form under penalty of perjury. So so you would miss that window.
exactly.
We have another question that came in, and it says, what is the best practice of inviting employees to apply for the certification?
um you know, it's been a long time since I applied for any employment, but I recall, prior to me starting my career with the IRS, they used to just give us this form to fill out, like in the like
When they're in there when they're in the process of doing because it looks like from what I can see, this is around the time that they do the job offer.
right.
If you're going to be initiating it, because it can't be after you've done the full hiring
Mm-hmm.
so it has
So
to be.
go ahead,
Yeah,
Cheryl.
go ahead, it has to be before then.
Yeah, so typically the date that you offer them the job, you would give them this form and say, "Hey, we need you to we need you to fill this out and send it back today."
If you qualify. Yeah,
Right,
so
because a job offer doesn't necessarily mean that they have, it doesn't mean that they have the job because you have to do your preliminary stuff like your background checks and make sure everything checks out that the whole part of that hiring process. But if, if the date that you make the offer, you give them that form and they fill it out. Because again, the date they give them information and the date that they are offered the job can be the same date. It just has to be before they were hired and before they start the job.
Thank you, ladies. I don't see, and I'm just checking again. Please, anyone, let me know if I missed your question. It's kind of hard to navigate the chat than the Q&A, but I wanted to make sure we did address everyone's questions since we do have enough time. If you have any additional questions before I conclude, you can go ahead and place it in the chat or the Q&A. I just want to summarize the information that was discussed today. So the work opportunity tax credit, it offers several benefits for you small business owners. And some of those key advantages, as was mentioned, is, for example, financial incentives, increased access to talent, reduced hiring costs, positive impact on communities, as well as compliance with diversity and inclusion initiatives. So that is something to think about, this work opportunity tax credit, as far as whether or not you would want to implement, if you haven't already, a process in place with being able to submit information, submit your employee information for the work opportunity tax credit. I do want to thank Anika and Cheryl for attending today, for providing this information to our small business community. I don't see any more questions as I'm coming to a conclusion. Anika and Cheryl, is there anything else that you would like to add to our participants today before we conclude?
No, the only other thing I wanted to add was you all are going to get a copy of the slide deck. Somebody had mentioned earlier in the chat whether they could contact us after this presentation was over. Oh, can they send questions after today? And yes, you can send questions after today. Our contact information is in that slide deck. It's our email address and phone number. What I would suggest is if you do have questions, the best way to reach us is by email, because we do a lot of outreach events, both virtually and in person. Sometimes we're not always near our telephone, but if you shoot us an email, we'll be able to get back to you. And then also on this slide is just a link to our Small Business and Self-Employed Tax Center. It's a lot of great resources here in regard to self-employment tax, employment taxes, any tax related information that you would need to know regarding your operating business and your business from a tax perspective can be found on that page. So when you have some time, just click on that link, check it out, bookmark it. And again, Cheryl and I are always available for any questions that you have. And we are going to research the questions that we did write down and get that information over to Wendy as soon as possible.
Thank you. And there was one more question that just came in. They said that they did fill out the form, but they sent it to the incorrect address. Do they still have 28 days to submit it?
Okay, so I honestly think that would have to be up to your state workforce agency. It would have to be up to them. Do you have proof that you sent it within the 28 days? Because they may show some leniency if they know that you did make an effort to submit the form on time. But I really can't answer for sure whether they'll go forward with the certification process or not.
And I just want to add to that, if it's in less than the 28 days, I would recommend that you have the employee, fill out the form and then resubmit it. But if it is outside of those days, then like Anika said, just reach out to them. You said the resource center, Anika?
The state workforce agency.
Okay. Yeah, reach out to that office and, ask them about, any exemptions that they may have. Thank you, everyone. I hope you enjoy your Wednesday and y'all have a good one.